You know what I find interesting slash really annoying is how much shitty advice there is about trading on the internet. And since we're becoming friends, I promise you that I am not going to sugarcoat anything. I'm going to basically tell you what I think, and since it's free advice, you could take it or leave it. But the one thing that I'm going to say, and I think that you're going to find is pretty truthful, that in trading, um, the trading is really hard because you get the test first and then the lesson afterwards. And one piece of advice that I'll give you before we go into this straight vanilla topic of demo trading is that it's always best to learn from somebody else's mistakes. So read, traders write books and they talk about their failures and they talk about their successes. Any trader worth his salt is going to put more value in his failures than in his successes. And I'll give you an example, although I don't believe in his politics at all. George Soros actually, it was really Stanley Druckenmiller who was a fantastic trader. George Soros is a fantastic trader too. But if you ever really listen to George Soros' interviews about trading, you never think the guy had a winning trade. He only talked about his losses. And, basically how he escaped them before they turned into catastrophic losses. So Paul Tudor Jones does the same thing. He talks a lot more about losses than his gains. So before we really go out into the woods, way off this topic, I'm assuming you're just starting out your trading journey and you're thinking about opening up a demo account, and you think that trading on a demo account is a really good idea. Or is it? In this video, since I can't do a straight vanilla topic like this without offering some advice that might be way beyond where you are as far as in the trading journey is concerned, if you do stick around the trading journey, you will realize that what I am offering is absolutely valuable. And I could say that with 100% certainty because I've been around a long time and I've watched things happen, and I've trained tremendous amounts of traders. And, I've watched what they do, and I can, see the downfall coming, especially, if they get caught in a loss trap. But again, that's way beyond what this is about. But some of the things that I want to go over before we start going over demo account trading is some truths that you need to know. And one of the truths is that until you make the unconscious conscious, it's going to direct your life and you're going to call it fate. And that was by C.G. Jung, okay, the psychiatrist. I think he was a psychiatrist. I think it's a brilliant statement. For the simple fact is that there's a lot of things that are going on beneath the surface that you're not really aware of, that are actually creating feelings, that actually create behavior. But once you make it conscious, you're basically going to be able to control it better. So the first lesson, if you're going to go into trading, is actually start to try to understand who you are as a person, because that's a very important step. And I would even go so far as to say, take a personality test to find out really what your personality traits are. It's really enlightening. It's a lot of fun as well. And that's going to really help you in many different ways. Building a trading system, understanding who you are and why you act the way you act. And you can change those things and you can make yourself much better just by doing that. Okay, so if you learn nothing from this video, that's a pretty positive step forward. Well, hi. Anyway, my name is Tom Alanchi, I'm the CEO of Park Avenue Trading. Okay, and I would like to ask you to please like the video if you do like it, and subscribe because I need subscribers. So I'm going to please ask you to do that. Before I get into the nitty gritty, which is happening right now, okay, I want to bid you a good hello and tell you what I intend on trying to teach you in this video, or it may be a two-part series because I have a habit of being very verbose and going longer than I should. So I'm going to basically go over why I think that demo trading is not a great idea and the reasons why that is. That's going to be after these slides. What I'm going to show you in these slides is basically the ruin rate of traders. So it's something that you really need to understand it. Again, like I said, I'm not going to sugarcoat anything for you. I'm going to tell you the truth, and it's important that we go over what the ruin rate is for traders. Now, in the European Union, it's required by law that all European brokers put up their client failure rate. Okay, and if you can actually go and Google this and look up brokers, European brokers, you can put in failure rate of European brokers. Okay. Now, a lot of times what they'll do is they'll reverse this number. They'll make it, successful accounts. All you have to do is subtract that from 100% and you find out the failure rates. Okay. So, but if people are looking for failed accounts and they see, 28%, they go, oh, well, 82% of people making money. No. It's because they reversed it. Okay. So that's, what you have to understand. So what I did was I went out and found the success rates and subtracted and came up with the failure rates. Markets.com over in Europe, 89% of their traders have failed. eToro, 68% traders have failed. IronFX, 71%. Tickmill, 71%. IG Market, 75%. Saxo Bank, 74%. FX Pro, 77%. So this is what you're going to be going up against. Now, I'm not saying that you can't be successful. I'm not trying to scare you away from it. But I just want you to know that you have to understand that trading in financials, can you afford to take the high risk of losing your money? I'm looking over to my left because I have on the screen some important notes that I want to bring forward to you. So that's why I look over to make sure I'm getting everything, So one statistic that the guru fanboys dismiss when they're buying their, how to make $1 million in 6 days trading in your underwear, is that they don't talk about, the high risk of losing your money rapidly due to leverage. On average, even with all these numbers, 71.6% of all retail traders lose their capital in a short period of time. 23.4% lose it in 2 years. Okay? That leaves 5% that can survive and approximately 3% that make significant money. You still want to do this? Well, if you do, then what I suggest is that you get some education. Okay? Now, we'll talk about that later in the video. But I just want to show you that here is basically the cold truths. Everyone starts off with the dream that they're going to get rich quick. That's the mistake. Okay? Trading is not a get rich quick. It is a get rich quicker, but it is not a get rich quick. 40% of people that enter this vocation trade for only a month. 80% of everyone quits after the first 2 years. Only 7% remain after 5 years. And out of all that, 3% are extremely profitable. Because trading has a very steep learning curve. And we're going to get into that as well. But at this point, I'm going to basically go over with you that profitable day traders, about 2%, make up 12% of the actual daily volume of trading. Okay, so that's small group. Now we're talking about there's also hedge funds that are involved in that group. That's why it's 12% of the daily volume, because daily volume in FX is extremely high. But you got to remember that the hedge funds are in there. 12% make up for all the trading activity. Traders that have a strong past performance track record are ones that are going to have a strong record in the future. It's because basically they have a system that works for them, that they made part of their personality, and they follow that system. And they build on their wins. Does every trader win every day? No. That's another fallacy about trading. You know, when people talk about win rates, you know, if you say that you win 90% of the time, and your net win is 10 pips, and on your other trades you're losing 60 pips, you're not winning anything at all. So win rate really has nothing to do with it. I mean, you have to win, and you have to win a decent amount, or else you really haven't won anything. So don't fall into the trap of win rate type of thing. You know, that's another thing with the guru fanboys fall suspect to the, you know, a 90% win rate with the Forex robot. You know, the robot, you know, I don't know, turbocharged robot, you know, makes 90% trades, wins, or get funded using our AI. Okay, so now artificial intelligence is going to dominate trading. It's totally insanity. Okay, if that was the case, banks would fire every one of their traders and just use AI. They have the money to do it. Why wouldn't they do it? All right, so don't even fall for that. Okay, profitable traders enter into trades at a frequency that's 5 times less than unsuccessful traders. So, in other words, profitable traders pick their entry points. And that's something that you have to learn. Okay, so basically now on the next part of this video, I'm going to go over why it's not a good idea to paper trade. And I actually wrote an article on it, and I'm going to pull the article up and basically read and talk from that article. Okay, so you're getting privy to the article. It's not even on the press yet. It's going to be going on to the press. So I titled the article, Demo Forex Account, A Beginner's Guide to Practicing Forex, or Is It? And I go over in the article basically what I was taught, or what I learned, what lessons I learned by training other traders. Okay, and I mean, I could tell you stories. I was in charge of, you know, when I became chief trader, I was also in charge of hiring traders for the trading desk. And I particularly really found out that it was really best to hire people that really had no trading experience. Especially coming from another bank, because they were set in some ways that basically it was really hard. If they didn't really want to break those bad habits, they wouldn't fit in on CRT Bank's proprietary desk. And it would just be very, very difficult for everybody involved. But anyway, when I was new to training junior Forex traders, I also thought that, you know, paper trading was the best way that they could test their market theories out. When you stepped onto the trading desk, you had 2 months to develop a trading system with all of us. We basically sat down, we asked you what your interests were, what you found to be true for yourself in the marketplace. Now, if you just came out of university, you didn't have any of that. You know, you had no ideas really. So you were forced to read, you know, I would say, okay, here's your mandatory reading, you know, Edwards McGee, Technical Analysis of Stock Trends. That was one book. A couple of other books, you know, that they would read. I'd force them to read basically a lot of Futures magazine articles. anything that, basically could give them some ideas and some flavor into what they'd want to do out in the marketplace and how they'd want to approach trading. And then, of course, we talked about risk management and, money management and things like that. So they had 2 months to basically digest this information and come up with an idea of how they wanted to approach the market. And then we would help them develop a trading system to meet those ideas and also fulfill their objectives. So, but in the beginning, what I would do is say, okay, look, we came up with this idea for you. Now you want to test it, you paper trade it. Okay, so what that meant was basically demo trade. Obviously, at the time we didn't have, MT4 or any other type of demo account that you could purchase and have virtual money. So, you had a trade blotter, buy, sell, net rate average on that blotter, and you'd write down, okay, bought 10 at 149 even, and stop loss 148.60, and then take profit 150.10. Totally made up, right? Just giving an example. Okay, but when I have meetings with my treasurer Aldo, he'd say, well, how did Joe or Steve or Sal or whoever do today? And I say, well, they would have lost $30,000 today. And he looked at me and go, would have? And I'd say, yeah. I said, I'm making them paper trade. And he flipped out on me. He was like, are you out of your mind? That's mental masturbation. A Forex trader can't be a paper trader. A Forex trader needs to be a Forex trader. And I started to understand his point, that you have to do battle with the exchange rates working against you and for you in real time. You got to put your strategy to work regardless of the outcome. And in the article, I give as many reasons as not to demo trade that I can recall. And one I can vividly recall was that Aldo said, as traders, only paper trader will not become familiar with true market adversity. So, when you're paper trading, when you're demo trading, you know it's not real. I mean, like, or you go into, oh, whatever. I mean, I'm buying 10 lots here. And meanwhile, you only have $1,000 to trade with. It's completely unrealistic. You would never be able to do that when you have, your real account open. And these are some of the things that will hamper you when you do open up a real account with whatever money you have. You're developing bad habits. You're training your brain to think that it's okay to trade a lot larger size than you really should be. So with that, you will not really feel the market like moving for you and moving against you. I mean, a market moving for you is euphoric, okay, but it also could lead you to do silly things like take profit too quickly. Market moving against you is painful, and it could force you to do silly things like not cutting your loss quickly. So you're truly not going to understand how difficult it is psychologically to reach your trading or your investment objectives. I wrote that here in the article. See, it's real easy to forget a trade that was part of your trading plan that's not working, where a horrific loss was taken on virtual money. There's no emotional pain with paper trading or demo trading. Another negative is that you won't really learn how to trade in a disciplined manner unless unreal money is at risk. With real money on the line, which also brings real emotions and anxiety that are absent with paper trading. You don't feel anything with paper trading or demo trading. This doesn't mean anything. See, I'm going to go out on a limb and I'm going to say all human beings want to be right. And they're going to do anything to prove themselves correct. Now, we all have a great investment in our self-education and also the money that we spent if we went to college, university, higher learning. And the last part that I'm going to leave you with here before part 2 is that people will cheat when it comes to demo trading, as there's no real account of the trades. Now, my traders in the trading room would make a minus a plus sign if it was working against them. If they went short, but meanwhile the market's moving up, they put plus. They make it plus. Long. Okay, and then sell. They cheat. So you have the ability to basically just close your demo account and open up a new one, and you can just forget everything that you did. So you get a fresh start without any consequences, which is training your brain in the wrong way. In the next video, go over some more reasons why it's not good, and then we're going to open up a demo account, and then I'll proceed as if you just want to demo trade, and I'm going to ask you to make a promise to me. So what I'd like you to do now is please like and subscribe to the channel. Second, go over to parkavenuetrading.com, get yourself a free, really good ebook, 3 Steps to Avoid False Breakouts. Really cool little book. Mandatory reading if you're a junior trader on my desk. And join the email list. You'll get really good information, and I hope to see you on the profitable side. Park Avenue Trading. Cheers, Tom.